Here's a summary of IBM's Q1 2026 earnings call transcript, suitable for reading aloud. Good morning, everyone. I'm here today with Olympia McNerney, IBM's Global Head of Investor Relations, along with IBM Chairman, President, and CEO Arvind Krishna, and Senior Vice President and CFO Jim Kavanaugh, to discuss IBM's first quarter 2026 results. Arvind Krishna kicked off the call by highlighting a strong start to 2026 for IBM. He reported revenue growth of 6% for the quarter, which, combined with robust margin expansion, drove a 13% increase in free cash flow. Krishna emphasized the durability of IBM's portfolio, the mission-critical nature of its client work, and the continued execution of its strategy. He noted a dynamic global environment, with no impact from Middle East developments in the first quarter, though uncertainties remain. Client conversations indicate ongoing investments in resiliency, productivity, and AI acceleration, alongside modernization of core systems and strategic decisions about workload placement and infrastructure control. These trends, Krishna stated, align directly with IBM's strengths. The company's performance this quarter reinforces its strategy of advancing as a software-led, hybrid cloud, and AI platform company. Key segment performance included: software revenue grew 8%, with Data and Red Hat experiencing double-digit growth. Infrastructure revenue increased by 12%, driven by a record quarter for IBM Z, up 48%, and strong performance in distributed infrastructure, boosted by generative AI's demand for storage offerings. Consulting grew 1%, showing momentum in enterprise data and business application transformations as clients modernize for secure and scaled AI deployment. Arvind Krishna dedicated significant time to discussing artificial intelligence. He outlined a pattern for technology waves, starting with infrastructure, moving to enabling platforms, and concentrating in workflows. Currently, the focus is on foundation models, with enterprises building portfolios of various model types and deploying AI across hybrid, private, and sovereign clouds, as well as on-premises. The core challenge, he stressed, is making these disparate elements work together, which is precisely IBM's focus. IBM is building a platform that allows enterprises to deploy AI on their terms, with world-class security, support, and integration, leveraging Red Hat for a common, open platform. He highlighted how more AI adoption drives demand for open, flexible infrastructure and automation, requiring a control plane for provisioning, integration, security, and cost management, which IBM's end-to-end automation portfolio provides. He also pointed to IBM Concert for proactive security risk identification and remediation, and the Confluent acquisition for streaming live, governed data to AI models. The watsonx platform and watsonx Orchestrate are key for multi-model world orchestration. AI additions to critical software products like DB2 and Cognos are embedding agentic AI for automation. For infrastructure, Krishna reiterated that IBM Z remains a critical differentiator, offering a low unit cost architecture for workloads requiring encryption, availability, and high throughput. He mentioned the Spire accelerator for AI inferencing directly on transaction volumes, citing financial services clients seeing significant savings from real-time fraud detection. AI-assisted modernization is also making mainframe application evolution easier. In consulting, AI is both a growth driver and a productivity engine, enabling faster, more software-driven delivery. IBM is leading this shift with its Consulting Advantage platform. He provided examples of client success, including ServiceNow leveraging watsonx for data quality and code generation, Visa continuing software and data modernization efforts, and Nestle embedding AI into order-to-cash operations using watsonx.data. On organic innovation, IBM Bob, an AI-based software development system, is now generally available with average productivity gains of 45% among developers. The company also introduced sovereign core software for organizations to run AI workloads under their own operational authority. Strategic collaborations with NVIDIA and ARM were also announced to expand AI workload capabilities. IBM remains on track to deliver its first large-scale fault-tolerant quantum computer by 2029, with researchers demonstrating progress in pharmaceutical discovery and materials simulation. Looking ahead, IBM reiterated its 2026 forecast for revenue growth of 5% plus and free cash flow growth of approximately $1 billion. Jim Kavanaugh, the CFO, then provided the financial details. He confirmed the 6% revenue growth, 140 basis points of operating pre-tax margin expansion, 17% adjusted EBITDA growth, 19% diluted operating earnings per share growth, and $2.2 billion of free cash flow, marking the highest first-quarter free cash flow in a decade. He elaborated on segment performance. Software revenue grew 8%, with ARR at $24.6 billion, up 10% year-over-year. Data revenue grew 16%, with Confluent contributing. Red Hat growth accelerated to 10%, with OpenShift now a $2 billion ARR business. Automation grew 7%, with HashiCorp contributing significantly. Transaction processing grew 2%. Infrastructure revenue grew 12%, with hybrid infrastructure up 25%. IBM Z grew 48%. Distributed infrastructure grew double digits. Consulting revenue grew 1%, with signings up 6%, indicating clients are modernizing for AI adoption. Kavanaugh highlighted IBM's productivity flywheel, which has driven $4.5 billion in savings since 2023, with an additional $1 billion expected in 2026. This fuels margin expansion, with operating gross profit margin up 110 basis points, adjusted EBITDA margin up 170 basis points, and operating pre-tax margin up 140 basis points, all ahead of expectations. For free cash flow, the $2.2 billion generated was up approximately $300 million year-over-year, driven by adjusted EBITDA growth. The company ended the quarter with strong liquidity and an investment-grade balance sheet. Regarding guidance, IBM maintained its forecast for constant currency revenue growth of 5% plus and free cash flow growth of about $1 billion for 2026. The company now expects software to grow 10% plus this year. Consulting revenue growth is expected to accelerate to low to mid-single digits. Infrastructure revenue is still anticipated to be down low single digits for the year, representing about a 0.5-point impact. Kavanaugh also addressed the Confluent acquisition's dilution, stating that ongoing synergy acceleration keeps them on track to expand operating pre-tax margins by about 1 point this year. He expects the operating tax rate for the year to be in the mid-teens. Key financial metrics: revenue growth, 6% free cash flow growth, 13% software revenue growth, 8% data revenue growth, 16% Red Hat growth, 10% IBM Z growth, 48% infrastructure revenue growth, 12% consulting revenue growth, 1% operating pre-tax margin expansion, 140 basis points adjusted EBITDA growth, 17% diluted operating EPS growth, 19% free cash flow, $2.2 billion management forecasts and guidance. Full year 2026 revenue growth, 5% plus, constant currency, full year 2026 free cash flow growth, approximately $1 billion full year 2026 software growth, 10% plus full year 2026 consulting revenue growth, low to mid-single digits full year 2026 infrastructure revenue, down low single digits Q2 2026 revenue growth, similar to full-year rate Q2 2026 operating pre-tax margin expansion, approximately 50 basis points. Significant risk factors and highlights/lowlights. Highlights: strong Q1 performance, robust software growth, especially Red Hat and data. Record IBM Z quarter, AI integration across the portfolio, productivity savings, positive client demand for modernization and AI. Lowlights, or areas of focus: continued global macro uncertainties, though not impacting current results. Modest deceleration in software growth quarter-over-quarter, explained by transactional mix. The impact of potential geopolitical events on energy markets was mentioned as speculative. Risk factors. The transcript did not explicitly detail risk factors in a dedicated section, but alluded to geopolitical uncertainties and macro environment dynamics. Most important statements from COO Arvind Krishna and CFO Jim Kavanaugh. Arvind Krishna, CEO. IBM is off to a strong start to 2026. Revenue in the first quarter grew 6% and, combined with strong margin expansion, drove 13% growth in free cash flow. These results reflect the durability of our portfolio, the mission-critical nature of the work we do for clients, and the continued execution of our strategy. Enterprises are investing in capabilities that increase resiliency, productivity, and accelerate growth. They are modernizing core systems. They are scaling AI, and they're making deliberate choices about where workloads should run and who controls the infrastructure underneath them. These are structural priorities, and they align directly with IBM's strengths. Right now, the spotlight is on foundation models. Enterprises are building portfolios. The core challenge is making all of this work together. This includes orchestrating across models, agents, and workflows, governing enterprise data, and securing these systems at scale. And that is exactly where IBM operates. We continue to make progress in quantum and remain on track to deliver the first large-scale fault-tolerant quantum computer by 2029. Given our strong start to the year, we remain confident in our ability to sustain revenue growth of 5% plus and grow free cash flow by about $1 billion this year. Jim Kavanaugh, CFO. In the first quarter, we delivered 6% revenue growth, 140 basis points of operating pre-tax margin expansion, 17% adjusted EBITDA growth, 19% diluted operating earnings per share growth, and $2.2 billion of free cash flow, growing 13% year-to-year, representing our highest first-quarter free cash flow in a decade and free cash flow margin in reported history. The strong start to the year drives our confidence in delivering constant currency revenue growth of 5+% in 2026 and free cash flow growth of about $1 billion year-over-year. Given where we are in the year, we believe it is prudent to maintain our guidance even as the underlying performance and execution are off to an encouraging start. Our software business, which we now expect to grow 10+% this year. The momentum in our productivity flywheel is fueling margin expansion while enabling investment and innovation. We are operating in a dynamic world, and there's more uncertainty than there was 90 days ago. But within our lens of what we're looking at, we're executing extremely well across our high-value innovation software, infrastructure, and consulting that sees signs of progress. Underneath that, look at what's happening to the fundamentals of our business. Our operating margins are up 140 basis points. Our earnings are up nearly 20%. Profits up 23%. Yes, free cash flow generation is the multiple that people more and more are valuing IBM, and I would agree with that completely. We started out with the strongest free cash flow position in over a decade, highest free cash flow margin, up mid-teens. In summary, IBM reported a robust first quarter of 2026, exceeding expectations in several key financial areas, particularly free cash flow. The company is confident in its strategic direction as a software-led hybrid cloud and AI platform company with strong momentum driven by AI adoption, the durability of its portfolio, and consistent execution. The reaffirmed guidance for the full year reflects this confidence, while management maintains a prudent approach in a dynamic global environment.